These are blow-away numbers.
Yeah,
but again, we have to look at
positive.
base effects, but certainly on that measure.
The base wasn't extremely helpful because by August time last year, it was already almost, the same as
the trouble was the rest of the world was in the
Yes,
pandemic.
It was. But at the same time, also we were a little bit worried. Our numbers were not as high as the actual numbers because we thought that the recent variant, the Delta variant outbreak seems to have caused a more, capacity issues at a certain ports, and therefore the numbers could be a bit weaker. But it's really encouraging to see that external-wise, the demand is still strong, and China's, external sector is still benefiting from it.
And imports, I mean, big beat here.
Partly it was the price.
Again, we look at that as a measure of activity within China as well, do we not? So
yes.
Our reports...
But the commodity price appreciation was a big part of it.
Absolutely, so in value terms, of course. But
yes.
Does it also indicate that these...
But still, in value terms, this is pretty handsome. Yeah.
Yep.
Yes,
but
it is very strong.
Does it mean that China's slowing down as much as we've been thinking before?
Well, on that, I would have some reservations because while the export numbers and import numbers are so strong, I'm afraid that the domestic set of numbers may not look as brilliant by the time that we look at it next Wednesday. If you look at IP, retail sales, and also fixed asset investment, we are expecting broad weakness there. I'm afraid that the lockdowns in August would probably have a bigger impact on those numbers. And on top of that, industrial demand is pretty weak at a time when infrastructure and property investment is actually being very much constrained in credit.
Helen, I'm just wondering, how resilient can those trade numbers be going forward, given the fact that Delta is creating havoc and all economies are getting impacted by it?
Well, indeed, I'm afraid that we have already been calling for export to peak out as a result of the Delta variant rampaging, around the world, and also the external demand possibly, on the brink of losing some momentum. However, I think China has again defied the gravity of the Earth and showed that their exports are still growing really well. But I'm afraid that going into September and October, we will probably see more pressure as a result of, for example, much higher shipping fees and also, China's own capacity having little room to improve.
So fair to assume that we'll see some kind of policy support from China?
Well, I think the policy support is not specifically to help trade. It's much more about domestic demand. At the moment, consumption is quite weak, and investment is actually, in our view, in the past 4 to 5 months, going down through a very rapid deceleration process. So they really need to lower the funding cost, in our view. So that's why we're expecting the interest rates to be cut and potentially to be followed with the RRR cuts by the end of this year. And more importantly, we think the credit controls on infrastructure and property sectors need to be relaxed on the margin. Otherwise, we will see a more pronounced slowdown going into the fourth quarter, and the downside risk on growth would be actually much more evident by then if policymakers drag their feet.
All right. Helen, just getting actually the trade balance number here as well, 58.3 billion. Now, that's gotten bigger here as well.
Yes.
And we haven't seen it broken down yet to see who the constituents are with the biggest, who has the biggest trade surplus. Well, China has the biggest trade surplus with, but what does that tell you?
Well, for the second half, usually the trade balance is a little bit bigger than in the first half. So for the monthly numbers, this is not. Yes, Christmas, orders are around, and clearly that this is still a time when people go back into their homes. They are probably back to the ordering online, world and trying to buy more, and China benefits from that. But I would say that the trade balance at the moment may not necessarily last for much longer, given that we are expecting export to weaken somewhat, and actually on the import side, the import at the moment that the commodity prices are too high, and we're still seeing that as an impact to eat into China's terms of trade.
Helen, I want to take a look at the yuan. It's shifted from depreciation to appreciation. Where do you see the yuan headed from here?
Well, in our view, we think that yuan is probably still going to be under some pressure, given that we are expecting more easing from the policy authorities in China. If you're looking at the U.S., the Fed probably is not in a hurry to taper, but ultimately we are expecting them to go on a tightening trend. Well, in terms of China, we think that the relative tightness in terms of monetary policy, if we compare those from the PBOC versus the Fed, that would tell us that China is probably going to ease a bit more relative to the U.S. And therefore, we are expecting the U.S. dollar CNY to actually, reflect that, i.e. that yuan will probably depreciate a little bit before the end of the year.
Tell me something, Helen. We've got a lot of reports of a China slowdown. These should suggest otherwise, but you know better than me. That's why you're on the program. Property takes up nearly 30% of GDP in
28.7%, according to our forecast.
You know, right? Okay. Some strains there, quite serious strains. How concerned are you, and what do they reflect?
Well, a couple of things. Mainly, it is the credit controls. Currently, developers are under a lot of pressure for liquidity because their developer loans, trust loans, bond issuance are all down, significantly from previous year's levels. And on top of that, mortgage loans have been now also suspended in several cities, and therefore, basically, limiting their capability to regain the pre-sales receipts to help themselves. At the moment, I think a lot of them are facing more pressure to pay back their loans, their borrowings, and potentially some of them are probably facing even default risk. And therefore, I think at the moment, we think that continue to maintain the credit control at the current intensity is not helpful in stabilizing the economy. We see that as a major risk to the downside, and we think that policymakers should try to move towards alleviating such credit control and hopefully recuperating some liquidity into this sector.